Good morning, 11:15 a.m. Pacific Standard Time. Before us, I have a Dow chart down 107 handles. Mr. Obama's speech about the fiscal cliff, about the higher tax rate, and all of the talk that could be resolved, at least to get some kind of clarity. Initial reactions are they sell the part of the news. Dow's down 108, Nasdaq 100 down 9.92, Nasdaq Composite 2689 down 14.79 handles, 111 on the Dow, and 1365 on the S&P 500. What you can see here on the daily Dow chart is that it's at this mass critical level of support that we're currently holding, as you can see where this diagonal trend line goes across. One of the things that we're going to look at is where does the sentiment change and where does the money off the sideline want to come in and get involved. And it is the time of year. Thanksgiving is coming up. Then you got Christmas. They are going to reach an agreement, because if they don't reach the agreement, even in his own words, holiday season won't be very pleasant. People won't be spending money, and people will be very uncertain. And the middle class and lower class will get hit irrespectively with tax rate increases. So basically, the way I see it, Mr. Obama is willing to agree to doing some things, but he's pushing it right back over to both parties, both Democrat and Republican. Therefore, some kind of deal is going to probably be made on this by the middle of next week. What's a stroke of a pen? As far as your tax reform goes, that will remain a 2013 issue. And there'll be plenty of discussions around it and different things that could happen. But once again, it's all going to be about how do I stimulate the economy and how do I stimulate the lower two-thirds of the base of this economy. It would be one of the first times that we have seen where this would be addressed between the two parties. That means that both sides have got to get out of themselves and look out for you. That's what they got to do. And the thing about it is since the election has happened, it's only been a week. Now, one of the things that happen on the news when these talks are happening, Dow is down 113 points, but it's on very, very, very light volume. It's not a heavy volume selling tape. That's the Dow, down 119 and going lower. 118 and going lower. But when bottoms are put in, they capitulate to these support levels. We break that support level, as I've said, post-Lehman days back in 2008, it's going to be 12,005. And we've already told people that long before getting here. So this is the knee-jerk reaction. As always, sell the news and then buy the news back. Because when they mark them down, they buy them cheaper. This is on the Dow Jones. The S&P 500. We have broken trend lines. The support level, as I've always said, for the last couple of months is going to be down here at 1350. And everyone's been told. And the evidence is here. It's before you, and it's now. So basically, you're down 10 handles to that 1364 area that I had talked about originally, and you've undercut the 200-day simple movement average on the S&P 500, meaning that when you get below daily 200-day simple movement averages, those are bare reversals to lower support levels and lower trend lines down here at 1351.92 on the S&P. Once the selling clears out of the way, and then there's a relief package that will probably follow, that's where you see the big rallies come in. Because people have to believe that they can buy. And we have more money sitting on the sideline than we've ever had. And with lower rates and some kind of deal getting made, it's how the bulls try to set up a rally to end out calendar 2012. 2013, that's a different issue. Right now, S&P 500 at its major catalyst support. NASDAQ 100, and the reason why we're just simply doing it, we told you down here, they pumped and dumped it. This is going to be that support level. We kind of broke it right here. That lower one part of the gap is 28.55, and this is a NASDAQ composite. And once again, all of these indexes, whether it be the Dow, whether it be the S&P 500 or NASDAQ composite, and or let's throw in the NASDAQ 100. Here it is, 25.50. We're right down here where we went from 25.50 all the way up here, darn near to 2,900 during calendar 2012 during the summer, which is a little bit different. But now that we're getting to what I say in the short-term macro of being oversold in all key indexes, that relief rallies will come. Rather anything else is going to change, we don't know, but we would be selling into the relief rallies. So far, the correction that was long overdue, we're right back where we started from when they started their little shenanigans and walking the market, and no one performed during this time. Mutual fund managers, hedge fund managers, none of them. They were all on the sideline here. Why? They never believed it, and they probably don't believe this one either. That same trade is coming back into play. So it's very important that during the speeches here, this is the first reaction. We were already down big, but we know every time the man speaks, the way that the trade goes, you sell it down, and then after it's gone and over with, then you rally back up. To confirm a rally, you're going to have to get a signed bill next week.